Do you have burning questions about how to secure your retirement? Well, in this video, I broke down my top 3 frequently asked questions that people ask me every single day, so I could share those with you now. Number 1 by far is, are annuities bad? I probably get this question more often than not, and it's sad because what's happening in America, and this is not a conspiracy theory, this is just what's happening. The loudest marketer, the marketer with the biggest budget, is often framing the narrative for people. And so what's happening is you have a lot of negative press by portfolio managers who don't want you to put your money into annuities because annuities can provide benefits for a lifetime in retirement. And if they run across clients that own annuities, they're not able to roll that money out and manage it for fees. I mean, it's just a really basic thing that's happening to people. There's a narrative that's being spun that these annuities are terrible because the big investment firms want to manage your money and they don't want you putting money into things that have lifetime benefits. They think they can outperform those. Now, whether they can or can't is a whole other video. But the fact of the matter is the marketing message is working. Most people think annuities are bad. So I always sit and ask them, I say, well, why do you think they're bad? They have no idea. I've never had anybody tell me a reason why other than they say,
well, I heard that they have fees, or I heard that you can't get your money out, or I heard the company keeps your money if you die.
There are all these different things that they've heard as negative talking points through infomercials or potential friends or other people that used to be advisors in the business. They've heard these things and internalized them as truths. But the reality is annuities aren't bad or good. The answer is annuities serve a function and they help fill a role that if some people are missing this for their retirement, they can do this like no other vehicle can. And what they really do is they just provide income. I mean, that's really it. They can do all kinds of other things and you can use them in other ways to create some efficiencies, but at their core, they provide income. They give you a promise from the insurance company that you're not going to run out of money in retirement. They're going to give you a lifetime stream of income, just like a pension, to be able to secure your retirement income and cash flow. And that's it. That's all they really do. So if you feel like that's bad, then I guess it could be bad in your definition or in your use case. And if you feel like that's a good thing that you need, then it could be really good. It's all dependent on your situation. Annuities aren't right for everybody. They're not a one-size-fits-all product. Every time I meet somebody, I don't recommend an annuity. In fact, a lot of times I don't recommend an annuity. But there's a lot of cases where people just have a hole in what they need on a monthly basis compared to what their Social Security is providing. And if you have that, then really the most optimal way to fill that is with an annuity. Some type of stream of lifetime income payments that you're going to make sure that you can't mess up, your agent or advisor can't mess up, and the economy can't mess up. You want something that's ironclad that's going to provide income so that as you age into your 80s and 90s and you're in a place where you're not watching your finances as carefully or closely as you maybe once were when you were first retiring, you can have that peace of mind knowing that the annuity income stream is going to take care of you and provide that income that you're going to need so you don't have to try to be up on what's happening in the economy as you age. So again, annuities, they're not bad, they're not good, they're just tools. Number 2, is life insurance too expensive? This happens very often. This is definitely one of the most common questions I get. Is life insurance too expensive to me? Am I too old to buy life insurance? Is another way to ask that question. A lot of people have term policies from when they were working. And what happens is they get close to the end of their term and then they kind of get in this dance where they're stuck. That could be a symptom of a couple of things. Number 1, maybe your agent didn't stay in touch with you from the time they sold you the term policy to be able to help you look at convertibility options or what's going to be the appropriate amount of coverage you're going to need in retirement. But number 2, it may be a function of just making assumptions. The biggest marketplace for life insurance is the senior marketplace, people over the age of 65. They buy more and more life insurance every single year. In fact, I sold life insurance to people in their 80s before, and you go, oh my gosh, that's crazy. That's got to be astronomically expensive. Well, again, people get trapped in the comparison of, well, I bought this life insurance policy when I was 40, and it was only $50 a month. Now I'm going to be spending this much for life insurance. But the reality is, when you compare term policies to policies that are meant to be with you forever, you can't really make that comparison because you didn't get anything for the term. You had peace of mind and protection, so that's what you got, but you didn't actually receive any money back from that policy. Some people have term with return of premium, so they're going to get every dollar they put in the policy back when the term is up. That could be a really great tool because that makes people feel like they didn't miss out or pay money to something they didn't get any value for. Now, the value you got was the protection that if God forbid something did happen to you, your family's going to be protected, your loved ones are going to be cared for. But the reality is 99% of term policies don't pay a claim. So when you're comparing that cheap premium to something that's never going to pay out or not going to pay out 99% of the time to something that's actually going to pay out, someone's going to get the money from the life insurance policy you set up in retirement if you do it correctly, then there's really just not the same equation. You got to look at the money you're putting into the policy You got to look at life expectancy. You got to look at what your family's going to get out. But still, oftentimes, you can get some really great leverage in your 60s, 70s, and you can even get benefits in your 80s. And it's absolutely incredible what people can do. So there's ways that you can add in life insurance benefits through things like modified endowment contracts, other types of special life insurance like survivorship for you and your spouse to buy together, and you can get some great leverage in retirement. So the answer is, it depends. Is it too expensive? Well, if you're comparing it to the term policy you bought in your 30s, then yeah, it's too expensive. But if you're comparing it to the need that it's going to fill or the thing that it's going to solve for you and your family in retirement, then no. In fact, if you look at some of the biggest life insurance cases ever written in America, these are on millionaires, billionaires, where they have significant estate planning issues. And the life insurance, when set up properly through the attorneys, when they do the ILITs and the really advanced planning, it's one of the greatest wealth transfer tools there is. So I wouldn't let anybody tell you that life insurance is too expensive when you get retirement. It just depends on what you need for it to happen and need for it to do for you. Number 3, by far, is long-term care insurance too expensive? A lot of people I meet, are concerned about long-term care. They've now been through it with their parents. They've been through it with the loved one's parents. They know it's coming for them at some point. They know the probability of needing it's like 70% if you're a 65-year-old married couple. So it's statistically probable that someone's going to need long-term care. They know they need a plan for it. They do not want to pay an expensive premium for long-term care insurance. So what do? Right? And then you have a lot of people saying,
hey, you shouldn't buy long-term care insurance until you get to the point where you're almost about to retire.
Well, that just makes it even more expensive because you're waiting and you're getting older, and long-term care is based on your morbidity. Your age is a factor, and the underwriting risk that you're going to become disabled. That's what underwriting for morbidity risk means. And so it can be expensive traditionally. But again, I'm a huge proponent of this new hybrid asset-based long-term care. It's a phenomenal way to reposition either dormant or old assets, annuities, CDs, excess money sitting in savings accounts, and adding long-term care benefits to that. And so there's really, really economically savvy ways that you can build in benefits for long-term care and have a plan, have that buffer asset that'll kick in and deliver the tax-free money you need right when you need it without having to go out and necessarily buy the traditional monthly, quarterly premium long-term care that the premiums you know are going to be going up year after year. There's ways you can lock that in, fix that, and add in benefits. Again, don't let anybody tell you that anything is too expensive or off limits for you in retirement. It totally depends on your situation, and there's a lot that's possible. I always pride myself on trying to find that edge for somebody, always trying to find some way to innovate and create a solution when everybody else says there's no way. And so I think there's a lot of ways you can really secure your retirement, but these are the 3 questions I get asked most often. If you have more questions, leave them in the comments below. I'd love to address some of those. Please like the video and subscribe to the channel. It really means a lot to me. It helps me reach more people. As always, thanks so much for watching. I'm Daniel Rondberg. I'll see you in the next video.